Okay, so just a quick disclaimer before we get started. I am not a CTA, which stands for Commodities Trading Advisor, meaning I can teach you the strategies, I can help you learn to analyze the charts, I can point out setups that I personally want to buy and sell, but the actual trading decision is going to be 100% up to you. Hey everybody, Benny Allen here, top trader with IM Mastery Academy. We are looking at a new signal call. It is the Euro Aussie 1 hour time frame Gartley. It is being called for a buy. And this is a great video to show you something cool about the Harmonic Scanner. It shows you that the market does the same thing over and over again. So you can see here that we've got our green line at the bottom signaling a buy. We've got our protective stop to protect our downside. So the buy entry is at 166.79. We've got a stop at 165. First TP is at 167. And this is really cool because not too long ago, like over a week ago, it actually called the Euro Aussie on a sell, and we made a substantial amount of profit from that. So we caught a lot of pips. So let's go over to the Smart Trader chart and we'll actually show you what's going on. So you can see here that this was our previous trade setup that we had. So we had our orders in and it hit all three take profits. So you can see from the entry down through TP3 was about 446 pips. So that trade has run its course. And you can see now exactly why the Harmonic Scanner is signaling a buy signal. And why is that? Because you had multiple Fibonacci waves here, 1, 2, 3, 4. This fourth wave completed. So look, you have your A, your B, your C, and your D. So just so you can see that visually, you can see here you had your A to your B. Your highest point within your AB boundary is your C, and then you had your D extension, which was recently hit. So this is exactly why the Harmonic Scanner is calling a buy on the Euro Aussie, because it has completed an ABCD wave sequence and it has exhausted. And you can see how everything falls in sync with the Fibonacci sequence, because as soon as that D point was hit, and as soon as a new official swing low, right, for those of you who are in some of my training sessions, you know that we look for that swing low to be established. So here was our low. Okay, zoom this in. Here is our low here, this candle, 2 candles to the left, 2 candles to the right that completed. This is now an official low. As soon as that official low was established after the D extension was hit, you had a new Fibonacci sequence that was created. And this is why we are currently in a buy trade once that started. So you're looking at from the below, this trade is already up 57 pips, right? So if you took that right at entry, so let's draw it up, okay? Let's readjust all of our take profits now because this was from the sell trade. All right, and let's see, it's very, very simple. Now we've got a CD completion. Now our C becomes our new A and our B becomes our new D, okay? And our D becomes our new B, I'm sorry. So now the game begins. So A, B, again, the scanner signal, we are buying this B to C. So on the retracement, so you have an entry at 166.79. So we'll mark that up here on the chart at 166.79, like so. So 166.79, 79. Okay. And you've got your stop loss at 165.19. So 165.19. So 165.19 is our stop loss, 165.19. And this is a beautiful, beautiful setup because look, we know oftentimes we can have a shallow retracement move that occurs, okay? Where you get this B to C move that'll come to this 236, and then what'll happen? Price and momentum will push it down first to around this 118, 127. We call that the shallow retracement move. Look how smart your scanner is. It puts your stop outside the 127 in case that occurs. Because then what'll happen usually is a high percentage of the time, price will come up, break a trend line, and then head up for a deeper retracement, right? Like so, before making this final move to the downside, if this is going to be ultimately a continuation, If it's not, it's going to take out this A and continue to the upside, okay? But right now, we are buying this B to C move. But the scanner gave it enough room to say, hey, if it wants to push down first to the 127, 118 area before it goes up. And when I say 118, 127, these are just the fib levels, right? These are just the fib levels. Here's your 118 extension. Here's your 127 extension. You see it put the stop right below that, right? So we definitely, if it does make that move, okay, if it makes that move, then we'll make sure that if it makes a move down to the 127, like this, okay, then what we'll do is we'll make sure that we definitely get that trend line. We wait for a trend line break for sure, right? Which is one of our moves, right? We definitely, if we see this push down, we definitely want to wait. We definitely want to wait for a trend line break. So if this move comes down, then we wait for this to happen, a push up, okay, with the pullback like that. And then we look to take that trade to the upside, like so, okay? So that's what we'll be looking to do. Now, okay, so we've got that covered. Now what we'll do is we see this trade is making a move, okay? Let's mark our first take profit level. So our first take profit level is 167.55. So 167.55, okay? So 167.55, like this. There's our TP1, 168.20. Is our next level. Okay, so 168.20. We go 168.20. So, and then our TP3 is going to be at 169.24. So 169.24. So 169.24. Okay. Like so, right at the top of that AB boundary. Okay. So always remember, as long as price doesn't take out the A, it has no choice but to go your way. So if price comes up here around the 61.8 area and it drops, then we've got a trend continuation to the downside. If it takes out this A high, then we're looking for a retest of that A high and a continuation to the upside. The downtrend is over. Okay. So here, this price is pulling back now between this AB boundary. So what we can do is this. Right? If we want to get into this trade earlier, we can go down to the lower time frame and see what things are looking like. So we take our entry point, stop loss and everything, and our TPs. We're going to take that to the lower time frame, like so. Okay. And now we can go down to the 15-minute and we could check it out. See, look. Now we're on a 15-minute time frame. Okay. So once we've gotten that new fib to form, right? This new fib to form on the 1 hour, we can now go down to this 15-minute and we could play it out to 15 and we could play it off a trend line break, right? So now if you're aggressive, right? And one of the things that we train you to look for is what? Look for that swing low, right? 2 candles to the left, 2 candles to the right. You have that. So if you want to be aggressive and put in a small entry once you get that swing low to form, great. Now the next move is the trend line, right? Once the trend line breaks, you can play it several ways. Once the trend line breaks and you get a bullish candle to close on the backside of this trend line, you can take the trade, okay? Or when you become a little bit more advanced, right? You can wait for the market to do something like this, where now we have a low, which will allow us to adjust this stop, okay? So you can wait for it to go like this, and you can wait for this price to pull back. Once this price breaks the trend line and forms a high, you then can put your fib on here like this, okay? wait for it to pull back to a key Fibonacci level, right? Okay, or past support, right? Okay, you can do that. And when it pulls back, then you can look to enter. Okay, you can look to enter. So this is what I mean. Now this trade becomes a nice fib setup, like so. And that's actually your TP too. Okay, so if you miss these areas to enter, just wait for price to break a trend line, then pull back. Okay, then pull back. And at that point, price, this is now looking like what? A head and shoulder setup like this. Okay, right? Okay, head and shoulder setup like this. Okay, trade that right shoulder. Okay, or if price pulls one of these on you, right, and takes out a high of resistance, this is a resistance area. If price takes out this high and then pulls back, right, and then pulls back, well, now we have what? We have a crown situation, right, which is slightly different than a head and shoulders. A head and shoulders is going to have an even neckline, right? It's going to have an even neckline like this, okay? An even neckline. But you see here with the crown formation, it actually takes out this resistance level, then it pulls back. So now you have what we call a king's crown formation setting up like this. Okay? Bang, bang, like that. Now you have a crown, okay, where price pushed up, broke this high right here of resistance, then it pulled back, right? So two different type of formations, and you guys will definitely learn that in the academy and Go Live TV and all of that good stuff. So now we can play our fib here. And now we look to buy right here in this area. This is our buy area right here. So now we're going to look to buy in this area here. And now we move our stop to this area down here. Here. So now we've got a highly favorable risk to reward ratio. Whereas now we'll look to take this trade to 61.8. You've blown through two profit levels here. And now look at my risk to reward on this trade. All right, here's my risk. And here's my reward. See? Just like so. Right? So we'll take that. There's my 61.8 right there. So now we've got a risk around 77 pips and a reward upwards of 172 pips, right? That type of risk to reward ratio is going to guarantee that you take some money home at the end of the day, right? And that's what it's all about. So the Euro Aussie setup is looking like a beautiful, beautiful setup, right? Over a week ago, it made us a lot of money to the downside, and now it has exhausted to the downside, and now the harmonic scanner is calling a buy trade since the trade has exhausted to the downside. So the scanner once again does an amazing job of finding these high probability trade setups for us. We just then, like I say, trade our strategy, trade our plan, right? Use proper risk management, and we take money to the bank at the end of the day. And that's what it's all about. So just showed you a few different techniques you can use for this trade. But we know that from the 1 hour time frame that our previous ABCD Fibonacci wave has completed.
it has formed a new structured low, and now we have a new AB boundary, and we are actually looking to trade this move to the upside. We've got our stop loss below our 127. In case we get that down move, we'll show you again how that can occur. Okay, you can get the push up to the 236, which is right here at the entry. You can get a push down, and then this move can make its way back up. So there's a possibility that the trade may do that, which is why a lot of times I love to trade on that 15-minute time frame, because I can wait on that, like we covered, I can wait on this trade to make its move up, because we know once this market pushes up past this entry, which this entry level is another level of what? Resistance right now. So we want to wait for this entry level, which is now acting as resistance, right? The way we can play it is to wait for that to break resistance and to come back and test resistance as future support. Okay, and once it does that, we can drop our fib on it, right? Repetition is the mother of all skill. So I like to cover these things over and over and over again if I have time. So look, push up, pull back, test past resistance, becoming future support. We pull our Fibonacci out because we want to measure that, right? So if this is a 100% move that we have here, how much of the market, how much is price going to take back? How much of this 100% move is price going to take back? Is it going to take back 23%, 38%, 50%, 61.8%, 78.6%, 88%, or 100% of the move, right? If it comes back down to this A level, that's all the fibs are doing, right? Equal measured moves. So this is the move that I love to look for, because then I'm looking to buy. I want to put my buy orders in here, and then I'm going to take the ride to the projected D extension. So I know that if price comes down around any of these areas here, what we call our energy trampolines, are 23.6, 38.2, 50, 61.8, then we're projecting a D extension here at 61.8, 1.618. If we go to a 786 pullback, we're expecting a 127. And if we go to an 88.6, then we're expecting a 118. And that's how the fibs work, is that based on how much price pulls back can determine how far price is going to go. And that's how we set our projections. So with that being said, always remember our mission is simple. We educate, we empower, and we enrich the lives of other people. Until the next time, everybody, God bless.